Does rates need to come down in order for more homes to go on the market come 2024?
Oh, well, the rates have come down. It was hitting 8% late October, now a little under 7%.
US existing home sales squeaked past November forecasts, rising 0.8% for the month and bringing the seasonally adjusted annual rate to 3.82 million units sold. Economists break down how lack of supply and mortgage rates will impact the market. Inflated prices and elevated mortgage rates could still be squeezing prospective buyers from making a purchase. So, will the interest rate rollercoaster shake the housing market in 2024? Let's find out. Rising interest rates are a double-edged sword for the 2024 landscape. Experts believe it will have both positive and negative effects on the 2024 housing market, cooling down speculative buying but impacting affordability and potentially leading to slower sales and inventory pileup. National Association of Realtors chief economist Lawrence Yun and Middleburg Community's chief economist Brad Case join Yahoo Finance Live anchors Brad Smith and Brooke DePalma to weigh in on home price trends to expect in 2024 and beyond. Yun notes that mortgage rates have come down, which will bring more buyers, but insists home sales performance can't be gauged until well into 2024 because home buying is not a snap decision. Case sees the high mortgage interest rates and the overall bubblicious nature of the market as factors that are holding people back from buying homes at the moment and into 2024. How rising interest rates will shape the 2024 landscape. Most of them expect the interest rates in 2024 to either stay at current levels or rise marginally, but they don't anticipate a significant impact on residential demand. Affordability and income outlook will be more critical factors in determining residential sales. However, this isn't necessarily a doomsday scenario. For genuine home buyers, it presents an opportunity for price corrections and a potential return to affordability. The key will be managing expectations and ensuring access to financing options that work for middle-income earners. If the government prioritizes affordable housing schemes and incentivizes banks to offer lower interest rates for first-time buyers, we could see a shift towards organic, sustainable growth in the residential market. The critical factor will be the increase. Gradual adjustments will allow developers and buyers to adjust, while sharp hikes could trigger a more significant slowdown. The rising interest rates have impacted the residential demand, and we can see record home sales in 2022 and 2023. The home loan rates for most financial institutions are at sub 10%, which is below the historical peak seen for home loan rates. For 2024, we expect the home loan rates to remain at current levels and not have a material impact on residential demand. Affordability and income outlook for purchasers would be a more critical factor in determining residential sales in 2024. Economists are also optimistic that the Fed has ended its interest rate hike campaign aimed at curbing inflation after policymakers held the federal funds rate unchanged for a third straight day on December 13th. The federal funds rate is the base interest rate that financial institutions charge each other for overnight loans. It tends to have an indirect impact on mortgage interest rates. Nevertheless, affordability challenges will remain in 2024. Pent-up demand and inventory shortages generally drive prices up, leading to high mortgage rates until the Fed lowers the federal funds rate. Mark Fleming, chief economist at First American Financial Corporation, expects the real estate market to be flattened. If the housing market was too hot in 2020 to 2021, it was probably too cold in 2023, and 2024 is still not going to be quite right, Fleming said in his 2024 forecast. So, when will the real estate market recover? According to Gumbinger, several conditions need to be met for housing construction to recover. To achieve the best possible outcome, we first need to see a significant increase in the inventory of homes for sale, says Gumbinger. This additional inventory will ease upward pressure on home prices, helping them offset or recover to some extent from their peak or peak levels. But Gumbinger says, I don't want them to cool down too quickly. A rapid decline in interest rates can cause a surge in demand, erasing inventory growth and causing real estate prices to rise. It is better to reduce prices at a steady pace, improving buying opportunities in stages over time rather than all at once, Gumbinger says. He added that mortgage rates would return to a more normal range of 4 to 5%, which over time would help the housing market return to 2014 to 2019 levels. However, Gumbinger predicts it could be a while before we get back to these rates. Will mortgage originations remain low through 2024? In recent years, staggering mortgage rates have led to a decline in mortgage applications. The good news is that interest rates have started to fall in recent weeks. Although application activity remains low, the Mortgage Bankers Association sees this as the bottom, with total mortgage loan originations expected to increase from $1.64 trillion in 2023 to $1.95 trillion next year. They also predict that interest rates will fall to nearly 6%. Fannie Mae also expects mortgage activity to increase in 2024 with a slow but significant recovery in single-family mortgage originations, according to a recent report. Housing inventory forecast for 2024 demand continues to outstrip housing supply and is expected to remain so for some time, as many homeowners are locked into low interest rates or unwilling to sell due to high home prices. It seems we do not expect the supply of used homes for sale to increase significantly until mortgage rates return to the low 5% range, so it probably won't be until 2024, said Rick Charger, founder and CEO of CJ Patrick. Entry-level supply in particular is near historic lows, driving up demand and causing real estate prices to remain sky-high. Still, there are some signs of hope. First, the outlook for home builders, which was previously on a downtrend, is on the rise again due to lower mortgage rates and improved construction conditions. The latest National Association of Home Builders Wells Fargo Housing Market Index, which measures builder sentiment, rose to 37 from 34 in December. A value of 50 or above means more builders are looking at good terms for new buildings. At the same time, new construction permits for single-family homes rose slightly in November, marking the 10th consecutive month of increases, according to the latest data from the U.S. Census Bureau and the U.S. Department of Housing and Urban Development. Despite persistently high mortgage rates and a decline in housing inventory, home sales recorded a small but surprising decline. Existing home sales rose slightly by 0.8% in November after plunging 4.1% in October, marking the 5th consecutive month of decline, according to the latest monthly data from the National Association of Realtors. Year-on-year transaction value decreased by 7.3%, the smallest annual decline since April 2022. These deals likely took place in the 2 months ending in November, when average interest rates on 30-year fixed-rate mortgages rose to levels not seen in more than 20 years, giving impatient homebuyers a chance to save money on interest rates. This suggests that it may be preparing for a rise. Although sales activity remains sluggish, experts predict that this rise may signal a turnaround in 2024. Lower interest rates will result in more buyers and sellers alike entering the property market, he said. Lisa Sturtevant, chief economist at Bright MLS, said, Bright MLS predicts existing home sales will reach 4.6 million in 2024, exceeding the expected 4.1 million in 2023, and inventory will increase about 8% by year end. Meanwhile, chronically low resale inventory fell by 1.7%, leaving existing home inventory with just under 3.5 months left at the current sales pace. Many experts assume that a balanced real estate market has 4 to 6 months' worth of inventory. So that's all for today. What do you think about the real estate market in 2024? Comment your anticipation and tips. Do hit the like button and do subscribe, and until we meet again, stay tuned.